and expense management. And so the question that's been raised by businesses increasingly now is now the right time to embrace digital transformation? The recent research from the Institute of Directors has cited that 74% of firms plan on maintaining the increase of home working. With the recent announcements from Deloitte last week, sort of making announcements that certain offices are going to be closed, and decisions by businesses like Microsoft, Facebook, and Google, loads of growing businesses are following suit and adapting to remote working conditions. So perhaps now is the right time to think about digital transformation. Over the next 30-35 minutes, we're going to look at some of the ways you can adopt digital transformation to empower your employees to work remotely whilst improving cost controls, cash flow, and visibility into spend by replacing inefficient paper-based or spreadsheet-based processes with automated solutions. I'll be focusing on two processes in particular during this session: the employee expense claim and reimbursement process and the accounts payable process, looking at supplier invoices. During this, I really want to dig into the main challenges that finance teams are up against and, crucially, what sits behind those root causes of those issues. Before moving on to how you can transform these processes by using technology to help you spot, adapt, and take action when you see the early signs of change, and to gain a competitive edge through new ways of working. But before we delve into the subject material, we're going to start off with a poll. So it would have already popped up on your screen. And the question we really want to ask you before we start is, what's really holding you back from embracing digital transformation? Perhaps it's the case that you're happy with your current systems and processes, or maybe you can't afford it. Perhaps it's the time that it takes to implement and train people. Or maybe it's the fact that you've got other priorities on your mind, or you've already taken the step and taken the plunge and you're on your way to digitally transforming processes. And so we're just waiting for some responses to drop through. You can already see some filtering in. It's almost like ask the audience this. All trickling in now. So we've got a few citing the time that it takes to implement and train people. We've also got a few sort of saying that they are happy with their current systems and processes, both of which are options that usually crop up during conversations today. I think a lot of people sort of are quite comfortable with what they use, but perhaps are unaware of some of the costs associated with using the same process. Very good. So a couple of results there, sort of looking at the general consensus around embracing digital transformation. So let's, with that in mind, let's have a look at what challenges that are facing finance teams today. Finance teams have always had pressures to manage cash flow, to control costs, to analyze data, and all in a timely manner to meet end of month, end of quarter or year, or other reporting deadlines. In fact, the majority of CFOs say to me that managing cash, and crucially cash flow, is the single biggest priority that they have, and can be one of the most complex to do. However, with the current situation, and from speaking with many businesses recently, it is clear that this pressure has increased significantly. With 9 in 10 businesses looking to continue to work remotely, the pressure is on finance to manage things as effectively as possible without spending too much money, but cutting costs where they can. With many employees currently working remotely, and what looks set to continue for at least the medium term and perhaps longer, manual processes are starting to show cracks. Employees are having to visit offices to pick up supplier invoices, some of which they had no visibility of or couldn't accrue for until that day. I've actually spoken to a few people who'd actually come into their offices to find overdue invoices which they didn't have any knowledge of at any point too. Teams are also unsure of what they can expense, what they can't expense, how they should be getting approvals. Leadership teams are struggling with understanding what's being spent. The security of data is being compromised. Approval workflows are unclear, untrackable, and unauditable. And so we have all of those mounting pressures on finance on top of all the ones from before, all whilst trying to manage this new normal and potentially feeling isolated and working with kids at home bouncing off the walls. With many businesses now looking at potentially permanently increasing the number of staff working from home and creating a work from anywhere culture, it's never been more important to think about your processes and procedures and how they actually impact employee experience. In fact, prioritizing employee experience is proven to increase productivity, delivering 21% higher company profitability and a 24% reduction in staff turnover, thanks to the innovative solutions and services that you empower them with. We were aware that many businesses had not digitized and automated seemingly simple finance processes, but the current situation has really made this stand out as a significant challenge, which is particularly relevant to the way expenses and supplier invoices are handled today. And one of the things to really consider here is a business is in two buckets at the moment. They're either in sort of a contracted state where they can't really entertain new projects, they can't entertain putting the systems in place, and they're in survival mode, and that's absolutely fine. You've then got businesses that are in a position where they have bandwidth, they have resource, they have the funding to make those amendments to processes, to help them scale for growth and to help them prepare for the next 12, 18 months. And it's really down to the business and to the leadership to assess where they're at. Now, even before the current situation, the current global pandemic and economic volatility, 60% of finance teams' time is taken up with day-to-day tasks. So these are the manual, cumbersome tasks, not strategy and forward planning. Companies like Bain and McKinsey are recommending now more than ever to prepare a 16-week cash flow forecast to strategically manage every penny and to avoid risks, while still working on strategically important initiatives you will have previously outlined. As mentioned before, with many employees looking set to continue to work from home in the near future and potentially even longer, without digitized processes, and with many businesses adopting temporary processes, the amount of time taken away from manual tasks is going to increase. There are growing security concerns, and there's an inability to get a true view on cash. Without a digitized process for employee expenses and invoices, maintaining control is going to become more and more difficult and an increasing strain on finance teams. It was actually just last week I was speaking to a business who went from a finance team of 6 down to 2 because the others were furloughed. Whilst 2 of those were furloughed were dedicated AP clerks, it meant all of the invoices they used to process full-time were now the jobs of the remaining 2 to do, in addition to all their normal day-to-day tasks and COVID-19 modelling that they had to do. Suddenly they would be starting work at 7 a.m. in the morning and finishing at 8, 9 p.m. that evening. And even that wasn't enough time to get everything done. They were worried that they were going to miss something important, accidentally pay a vendor twice or not at all, and that unapproved spending would slip through the net. And ultimately, the risk and accountability sat with them. Now, in this situation, they felt that they were faced with 2 options. They could either keep working late and burn out, or automate what can be automated and digitize their processes. So there's an element here of being able to control what you can control whilst dealing with the uncontrollable, that being the economic climate. A very similar story, actually. I also worked with a company very recently who had a remote finance team, but they still managed their invoices by rekeying PDFs that were sent via email into their ERP. But they had no pre-approval process, they had no controls in place to spot when they had human errors. It was only when the business found itself in a dire cash position that they audited their spending, and they found that simple slips of the finger meant that they'd mispaid some of their vendors to the tune of millions of pounds, which they had to go through a lengthy refund process to get back. The short and medium term impact on their cash flow was astronomical. It was huge. And again, they knew that if they continued as they were, the same problems would keep happening. And so they knew it was the right time to digitize and embrace technology. So reframing this here, your business could be small, it could be mid-sized, it could be large. They could be trying to scale up rapidly in this environment or scale down without significantly impacting business continuity, but still encounter issues like these because your manual, paper and spreadsheet-based processes do not enable you to keep your finger on the pulse with cash flow, scaling costs, controlling spending, or keeping employees working at their optimum. If you are growth focused right now, there is a real conversation to be had about how to control your costs to maximize profitability. 66% of finance leaders, 66% want to grow their business without growing their headcount in finance. In most cases, the fully loaded cost of a new employee can tower over the cost of a new solution to do that role. If you need to suddenly scale down, like my client did, would you be able to do that right now without increasing risk to your organization or negatively impact your employees' experience and satisfaction? The real fact here is digital transformation really isn't about buying new technology because other people are. It's about solving your own unique business critical problems and being able to anticipate and mitigate future risk before they negatively impact your business with the help of faster access to data and better use of existing resource. So people come first, and every business is a case sui generis. It's all a case of using technology to empower what you already have to prepare for the future. So how much is a manual process really costing you? Now, we already had a couple of members today on the poll suggesting that they are happy with their current processes, but it might be the case that there isn't a full understanding of the costs of using the same process. When we speak to many businesses, the first question we usually ask is, how much does this process cost your business now? What are the fungible costs? You may not have looked into this before, and the simple answer is it's probably more than you think. To put some numbers behind this, we actually conducted some research with AMI partners, and they revealed 3 key areas that were cost sinks for a business: visibility, risk and compliance, money and time. Let's have a look at each one of those in turn. So the findings on visibility show that businesses struggle with seeing spend clearly. Especially in these tough times, not having an accurate view on your cash flow is setting your business up for a truly bumpy road. Duplicate data, missing data, or simply data that you cannot trust is really going to impact you as it is many others right now. How can you possibly come up with a strategic plan to weather the storm or to achieve your objectives if you're basing decisions on guesswork or an incomplete understanding of your business's true financial situation? The inability to accurately track spending trends is directly related to data visibility and can result in overlooked errors and missed opportunities for savings. A lack of integration with budgets affects your ability to see how spending is impacting the overall plan. One of our colleagues in America was recently a finance director for a group of hospitals. And as you can imagine, the supply chain there is extremely important. As the hospitals would use up medicines and supplies, the procurement teams put in orders for restocking, and usually the delivery would happen on that very same day. Now, they had a good team, they worked hard, and their manual processes worked. So there's no need to change, surely. Wrong. Being a finance director for a group of hospitals means you're on call 24/7 for any financial emergency. And there was a call that she got on a fateful night, in the middle of the night, to find out that one of their key suppliers had put them in a credit hold. And she was thinking, what on earth has happened here? What's going on? And it turned out that the team was really behind on processing invoices due to people being out on holiday, people being sick. And frankly, paper invoices had gotten lost amongst the piles of paper. They owed a lot of money to the supplier and they had no idea. And now they had a hospital which had run out of important medications and no way to restock until the supplier was paid. Now, this was a large sum of unbudgeted capital that they had to find and had to pay. And this was a really big turning point. This was when they realized they simply could not take such a big hit financially again, or risk key relationships with suppliers. So they knew they had to improve visibility, and that drove them to reinvent their AP process with technology to drive their own digital transformation. The moral of the story here is anticipating and acting fast and putting something in place to avoid such a challenge from happening in the future. And maybe this is something that you haven't thought about. Perhaps it's something that could be addressed. The risk and compliance is a major area that finance is particularly concerned about. When we asked around the biggest challenges surrounding risk and compliance, over 2/3 cited incomplete documentation as a top concern. Without proper documents, you can't validate or track the actual amount of an expense or an invoice. But the fact is, businesses risk fines for non-compliance when it comes to auditing if they're not able to locate the correct files or unable to recognize fraudulent transactions when they occur. Other concerns include regulations related to industry. So the pharmaceutical space has been quite big at the moment when it comes to the Bribery Act and the Sunshine Act. That's sort of a key area where most businesses don't have enough controls over. 61% cited that tax and compliance issues was a massive area. If you think about staff that are traveling perhaps domestically or maybe venturing out to other countries in the future, where there may be tax and compliance issues, you need to be aware of that managing as a business. What about your vendors? Do you work with people overseas? I was speaking with one of our partners, TaxBack International, a couple of weeks ago, and they were explaining to me how a huge percentage of spend today happens overseas, and they're usually VAT charged incorrectly on their invoices, which either shouldn't have been charged and is therefore refundable from the vendor, or it's reclaimable from a local tax office. Now, the majority do not recover this at all and are literally leaving money behind where they absolutely can get it back, especially on the supplier invoice side. Often people don't because it's long-winded, it takes a lot of detail of each country's processes, and it takes time away from finance. A fact of the matter is, and this is from Her Majesty's Revenue Customs, 54% of claimable VAT is left on the table by growing businesses in the United Kingdom. And the main reason for that is because businesses are wary of facing penalties and charges when it comes to claiming VAT. So the findings are telling us that businesses recognize if they haven't implemented best practices, they are susceptible to fraud. They are susceptible to budget creep, regulatory fines, and penalties. When it comes to processing expenses, even today in the remote working world, how do you deal with expenses that might be in different languages? German, Spanish, Mandarin? Can your finance team actually translate this? How do you know if you're paying for someone's genuine expense claim or for something else entirely? One of our clients used to pay everything, even if they didn't know what was on the receipt. And it was only once they used an automated tool, so they used Concur, and they used our multilingual auditing service, they could actually look at the expense claims. And they actually found out that they were paying for an individual in South Korea for their fine art purchases. So this person was defrauding their company for years. They didn't know until they actually used the auditing service. And it's not just individuals defrauding companies that you need to be aware of, but there is an increasing trend of invoice fraud happening right now. So seemingly innocuous invoices from suppliers who look recognizable for things that you're probably buying are actually funneling payments straight into fraudsters' banks. Now, this is particularly bad for not-for-profits and charities. Devon-Air Ambulances are one of our clients. They started seeing these types of invoices coming through, and they realized, amongst all the benefits of digital transformation, it was fishing out fraud that was going to be important for them. So fungible hard cost savings that can be gained from using a solution. So time is something that we've already touched on, so the need to do more with less. Now, this comes into stark focus when we look at the costs in relation to time and money. And here we can see that the overwhelming majority can see that time is being wasted on audits due to non-compliance, that time is being taken away from strategic work, that approval cycles are taking quite a while. In the remote world, where it comes to staff putting through expenses for office equipment, so laptops, keyboards, monitors, invoices for similar things are taking ages to approve because of really clunky email workflows, people not actually approving things, and things not really being paid on time. It's been a big issue, especially in the remote world. Most of our analysis here was done before the current pandemic, but they've only been exacerbated since. So all of these challenges, they share a common trend. They result in lost time and financial opportunity. When you want to do more with less and scale with tight resource, it's a real problem. And that's what the pandemic has shown us. When I'm speaking to businesses about their goals today, I usually hear something like, we're growing our sales team. We want to increase revenue by 20, 30%, or something like that. But when I ask what's holding them back from achieving that right now, I hear one answer: time. And there isn't enough time. People keep dragging out. They'd always tell me, I wish we had an extra month. I wish we had a Q5. The average sales rep spends around 2 hours a month filling out expense claim forms. But those of you in finance on the call today, I imagine that even after they've spent that time on their expense reports, they're still coming through incomplete. If you multiply that across your sales teams, you could be paying your sales staff weeks of wages to fill in Excel forms to be reimbursed, rather than being in front of the clients and driving the sales. One of my own customers right now looks set to save 60 hours a month of sales time. So that's a whole extra week and a half a month just by automating their expense process. And suddenly they now have a Q5 to play with. And this is a typical story. Those who do not leverage technology are missing out, and their competitors who embrace technology are the ones that have the edge. Indeed, there are ways of working out how much time and money you can save by automating with a solution like Concur. Later on in the presentation, we'll share with you some links to some ROI calculators so you can have a look at some of the savings that could be gained by automating. So we're going to go to another poll now just to have a look at some of the challenges that you're facing today. So in a moment now, a poll will show up on your screen. Again, just asking you about some of the challenges that you're facing today in finance. Here we've got a variety of options here. Some sort of looking at visibility into spending, others looking at time, difficulty controlling spend, staff inefficiency, and lost documentation. And we've got a few votes sort of coming through now. And again, all of these challenges are similar challenges that finance are facing today. We can see here that time is probably the main challenge that's facing finance off our poll, and then everything else relatively close by, sort of looking at inefficiency and visibility. I think time is probably the big one that crops up the most, but I would also say, given the pandemic and working remotely, visibility has been a huge factor. Businesses increasingly need to see when spend is going to happen and forecast more accurately budget so that they can prepare. And that might mean pre-approving expenses before they're even made. It might mean pre-approving invoices through a purchase ordering module. And there are a couple of things to maybe think about when looking at your own businesses. So from speaking with many businesses today, it's clear that COVID-19 has been a catalyst for reassessing finance processes to ensure that systems are future fit, robust for any situation, to minimize any disruption to the business. Indeed, many are considering what the new normal will be and whether they are ready or not. A recent report from McKinsey referenced that any recovery plan for the economy needs to be digitally focused, with businesses adopting technology. So what are the benefits that businesses can experience by digitizing their finance processes? And indeed, how can this support businesses during this time? With more people working from home, by digitizing processes you no longer require, you don't need to wait for invoices to be received. You don't need your employees to spend valuable time submitting expenses. We've spoken to numerous customers recently, and one of the key factors they highlighted this is how easy it's been to transition to home working. The process was seamless. Employees could submit expenses and approval processes would take minutes. Invoices could be submitted over the internet and automatically entered into a finance system to keep their business going, as management would focus on pressing challenges. The other day, I was speaking to a business and they were telling me that they were sending a courier to their offices to pick up their invoices, take them to a team member's home to then process the invoices, when we have customers that are processing invoices in real time. So this means equipping staff with a solution like an app, something readily available that they can download off the App Store, the Play Store, that can help them manage these processes, as opposed to long drawn out email heavy approval workflows, or in this circumstance, sending a courier to an office to pick up invoices. Visibility is one of the top benefits experienced by firms automating their expense and invoice process. It's probably the second highest rated benefit following time savings. Improving visibility of company spend has a number of add-on effects. 60% of growing businesses in the UK using automated solutions stated that they're better able to overcome general business challenges thanks to visibility into spending trends. This increases to 70% with firms using Concur today. Michael Tinney, who's a finance manager at FBD Insurance, had a lot to say on the subject of visibility. He told us a lot about how CPD and training was paid directly by staff and reclaimed through expenses rather than going through the accounts payable process. He told us that their learning and development section were not really able to get a comprehensive picture of training expenditure. By using Concur's reporting, they're now able to produce a report of training expenditure, so they can actually forecast in the future how much that would cost when training would be on the calendar. Now, loads of studies have shown us that finance leaders aren't completely confident that employees can comply with company spend policies. Indeed, our study with AMI suggested that 68% of finance leaders feel this way. The research also told us that more than half of firms using an expense solution stated that better compliance and fraud reduction was a key benefit of automation. Because with better visibility and tracking, employees are less likely to submit non-qualified expenses. The risk of missing documentation is also significantly reduced because of better data capture and the ease of capturing receipts. The bottom line is that businesses using an automated solution saw a significant decrease in missing documents. Digital transformation also has a huge impact on time and financial challenges. For finance, time is the single most valuable commodity. Having time is the difference between logging off your computer and going for bath time and staying late to finish month-end reporting. It's the difference between having a reactive team or having time to dig into data to find opportunities to improve your company's performance, to shift to being a proactive profit-making center in your business. And don't just consider time in the sense of completing tasks. Think about time in the sense of longevity of that person's career with your business. Accountancy courses are long, hard courses, and they're completed by truly brilliant, intelligent people with a penchant for number crunching. The frustration finance feels when they've completed this to then go into doing a data entry job is real. Chief financial officers usually list high staff turnover and low satisfaction as a real challenge, especially when you consider when people leave to do so, it's their skill sets not being utilized effectively. By using technology to drive change and development within your organization's finance team, you will improve job satisfaction and give your team a real purpose with strategic initiatives, reducing staff turnover and growing your talent from within. So here's some food for thought for you. A typical growing business that uses an automated expenses solution looks to save around £24,000 per annum. Firms using Concur would report greater than average savings of £31,000 per year. And the story is the same for invoice management. So if you're in a situation today where you're thinking, you know what, in normal times, our expenses process is costing us time, it is costing us money, and there may be fraudulent claims being submitted. Perhaps the downtime is the perfect opportunity to try something new. With invoice management, most businesses are now looking at streamlining and going paperless and being more mobile. Again, maybe the calm before the storm is the perfect opportunity to streamline. Indeed, it was the Big Four that suggested during the last financial crisis in 07 and 08 that the businesses that took action to digitally transform were the businesses that survived, as opposed to the businesses that didn't. So the question you may now have is, how can I achieve this? How can I digitally transform my finance processes? And the answer is straightforward. It's by deploying a single, easy to use and integrated platform for managing spend. So an app that can be easily rolled out, an app where people can download it from App Store, Play Store, and it has functionality, things like optical character recognition technology to eliminate rekeying of data. It might be an automated online approval workflow that has mobile access. It's fully auditable. Something that gives you comprehensive analysis and reports into spending data to get to the truth sooner. And built-in policy controls to reduce risk and ensure compliance so you can realize the benefits that we've talked about today. One of the clear benefits of implementing an automated solution is that it helps to reduce and eliminate the need for paper-based receipts or invoices. Once these documents are stored centrally and electronically, these can be accessed, processed, and approved with ease. And when you can do this, you get better data visibility, smoother approval processes, an audit trail, and more control of your cash. It allows you to be more strategic about financial management, track trends, and spot opportunities for cost reduction. In an increasingly decentralized world where people are working remotely, the need for centralizing process couldn't be greater. And this is one way of doing that. So, what could be your next steps? If you're keen to find out a bit more about finance transformation and looking at how technology could support your business and your employees, feel free to reach out to me after this webinar. I'll be more than happy to arrange for a consultation to maybe show you a bit more about the tech behind the words. We've also got a range of tools on the SAP Concur website, including a free online ROI tool. So this is a really handy tool that will give you a breakdown of some of the cost savings that could come from automating your processes. We've got that for the expenses and the supplier invoice process. We've also got a self-guided demo. So if you wanted to visualize what a solution could look like in a remote working world, have a look at the self-guided demos, again, for the Concur invoice solution, the expense solution. And really, these resources are here to help you visualize what a better process could look like, but more importantly, to map out the fungible cost savings. And so, as we look ahead at a world that is driven by a remote working advent, the time has come for businesses to think about ways they could make their staff's lives better and their processes better. The time has come now to get those time savings, to spot the opportunity in difficulty. So that's me done. That's sort of a whistle-stop tour through some of the observations that our growing businesses team at SAP Concur have made around digital transformation and around the supplier invoice and expense process across finance teams today. So thank you so much for listening. I think we've got some time now for some questions.
Yes, thank you so much for that insightful presentation. We do have a few questions that have come through. So the first one from Francesca asks, supplier invoice payments / purchase to pay processes is part of standard ERP functionality. Could this be seen as sort of an engineering, or what are sort of the benefits that artificial intelligence could use to sort of help them bring this forward? And when the client's existing tech might need a straightforward configuration, what's the best way to approach this?
Okay, that's a really good question. Thank you, Francesca, for sharing that with us. So you're right in that most ERPs and finance systems have all-encompassing processes to help deal with things like the supplier invoice process. We usually find that 8 times out of 10 there isn't a capture module for invoice management, and there isn't a feature for managing non-PO spend. So that's one thing to sort of bear in mind. The second thing, when it comes to payments, I'd say around half of businesses have got an efficient way of actually processing payments. The other half are the ones that come to us and look at streamlining the P2P from end to end. One thing I must advise, especially when looking at an app or a solution like Concur, it's there to supplement existing infrastructure. So most of the businesses I talked to today, they have an ERP, they have a finance system, they've spent money on these systems, only to find that things aren't fully automated. And it's my job to then scope out, understand, okay, they could do with a PO module, they could do with automating the capture, they could do with automating the payment piece. Maybe they don't need this bit of the solution, and positioning it to them. The bottom line is Concur is there to work alongside an existing ERP or finance system. It's not there to replace. When it comes to harnessing artificial intelligence and machine learning, I'd say the real benefit of that comes through with the capture. Most businesses have so many different invoices coming through, but varying different formats and structures. When invoices are loaded into a solution like Concur, during the initial 4 or 5 weeks, the solution will use machine learning to get a handle on the nature of the invoices. So then it can start to get used to the invoices it's processing, so much so that it can then automatically capture all the data independently without making errors. That's from my side where I see the machine learning coming into play from the Concur invoice solution. From there, you do see sort of the soft benefits coming through in the reporting, but the main element there is on the capture.
And we've got another question here Please explain how your solution is fully complying with the regulatory changes to the input VAT recording and VAT reporting after the Brexit transition period ends on the 1st of January next year.
So a really timely question there. So there are two answers to that question. The first is Concur is HMRC compliant. Because Concur has been around on the market for over 26, 27 years, it's worked closely with all local authorities globally, especially when it comes to taking into consideration revisions to compliance and legislation. The second thing to note is Concur is the only solution in the market that's backed by and accredited by the Institute of Chartered Accountants for England and Wales. Part of that means that we have people within Concur that are managing the solution and ensuring that it is up to date with the latest legislation. Indeed, I think on our customer support site, there is actually access to some of the amendments that have already been made within the solution to comply with some of the changes. But the one thing to sort of take away is Concur is always keeping in line with the latest regulatory change. We work with several government authorities globally as well. Part of the reason for that is because we're able to act fast when it comes to adapting to regulatory change.
Great, thank you. And we've got two questions that were sent in via email, so I'll just read those out. The first is, with the rise of home working, is there an increase in security risks, and what are the best way to mitigate these?
Yeah, so with remote working, it's become incredibly difficult for leadership and directors to actually control what's happening and gain visibility into spend in general. So this could mean fraudulent activity. It could mean staff that are claiming expenses for things that haven't been verified. A client of mine that recently invested in Concur, has rolled out Concur, chose Concur purely to deal with that issue of security and compliance. They had loads of staff buying office equipment and they wanted to build in rules. So one of them was medical requirements for buying chairs with lumbar support. They wanted to put that rule in place so they could then verify the expense with a medical note so that expense can then be put through. So in the remote working world, it's been difficult for directors and managers to actually manage staff in a way that isn't too controlling, and also respecting their social freedom and their liberty, but at the same time controlling what's being spent. Using software and technology to actually gain visibility into spend and being able to put some rules and policies and controls into spend is a way of clamping down on issues of security, on issues of fraud, on issues of compliance. And one of the most effective ways of doing that today is by using an app.
And the final question that we've got here is, what would you say are the key priorities for directors and the finance team in today's economic climate? Of course, taking into account, as we've just formally talked about, the upcoming Brexit transition and also the kind of ongoing COVID situation that we all find ourselves in. And also just to say, if anybody does have any further questions, please do post them into the Q&A box or the chat, and we will endeavour to answer them before we close this session. Thank you.
Thanks, Rosa. So with the current economic volatility, the global pandemic, Brexit, and almost certain sort of global recession, there are a couple of things that have cropped up in discussions recently with finance directors and CFOs. The first thing I think is cost control. That's been an important thing. So it's preparing for the next 12, 18 months in a way that's conducive to reducing costs and at the same time using staff's time more efficiently. The second factor is visibility. Visibility has been so important. Remote working has only, if anything, exaggerated the importance for seeing where spend is happening. So directors are far more wary of spend actually happening, and they want to see spend being approved beforehand. So it means we've seen an uptake in businesses looking at implementing a PO solution, so that way before an invoice is even incurred, they've already asked for permission from the company to buy something. It might mean seeing budget in real time. So instead of reviewing a budget on a quarterly or annual basis, directors can see budgets against expense and invoice spend in real time. And so there is a real impetus on actually seeing spend more proactively and managing it more proactively. I think the final factor there is employee satisfaction. So many businesses are worried about losing staff because it's so difficult to manage them in a remote circumstance. How do we make their lives more interesting? How do we keep them engaged? How can they work for a promotion? How can they get promoted in a remote world? What can we do to empower them? And so that's seen again an uptake in investment in technology. When you're looking at something like Brexit, or you're looking at financial calamity or volatility, what are the traits of businesses that survive and thrive? Is the propensity to adapt, is the propensity to make changes. To quote Churchill, the pessimists see the difficulty in opportunity, the optimists see the opportunity in difficulty. So at this point in time, there's a real sort of dichotomy between the businesses that are going to succeed and the businesses that aren't. And it's sort of having that foresight to innovate, to then support their ability to adapt with the changing market.
Great, thank you so much, Adrian. I think that's all the questions we have for today. So I'd just like to take this opportunity to thank you again for that presentation, to thank all of our attendees, and to remind everyone that this webinar was recorded and will be made available in a few days. And if you've got any follow-up questions, please do get in touch with the team and we'll be happy to pass those on. Thank you again. Goodbye.